What is up, everybody? My name is Dylan, Space Cadet Crypto, and today we're going to be talking about AMC stock and its recent pump to all-time highs. Right now, we are seeing a recovery, but we're going to go over the price action in just a minute. We're going to be talking about some big news to come out recently for the AMC stock. So if this interests you and you don't want to miss on any important updates on AMC stocks or any important stocks that are pumping right now and crypto as well, make sure to like and subscribe and turn on all bell notifications so you don't miss on any important updates. But let's jump right in. Okay, let's start off this video talking about the short squeeze that is still yet to come for a lot of investors here, talking about AMC that is still set up for a potential huge short squeeze that's happening in the very near future. And we do see that in this article, it says AMC and GameStop are still set up for a short squeeze. We do see that the IR here at S3 Partners tracks short interest in stocks in real time and posted a number on his charts on Twitter saying that AMC and GameStop's metric is at 10 out of 10 for a potential short squeeze happening. And the way he gets these numbers is from an algorithm he created that is not subjective. Some of the factors are in a short sale liquidity, trading liquidity, financing liquidity, and market to market profit and loss. And they said here, there is a large amount of dollars at risk on the short side. There is a huge, large proportion of securities tradable float shorted, and there is scarcity to stock loan supply. So following all these parameters, he found out that AMC is a 10 out of 10 on the chart for a short squeeze. And if we look right here, we do see that 74 million shares have been shorted, 15% of the short interest of the float. There's been a 13% of the short interest flow, and they have seen here shorts are also down $4.5 billion in 2021 here. So we did see that the short interest, which is this orange line right here, has increased since March, right? A lot of people are shorting AMC, but as we see here, we see a huge drop off in short interest because we do see that a lot of people that are shorting, mainly hedge funds, are actually getting scared that they are going to be losing more money, and they're being more cautious here because they did not want to see the same thing that happened to Melvin Capital when they shorted GameStop. They lost 50% of their money. If you don't know what I'm talking about, let's take a look right here. This headline saying that the GameStop investor Melvin Capital lost 50% of its investments in its first quarter. We saw that huge move to the upside with GameStop's price. We saw Melvin Capital, among other hedge funds, lose a lot of money. In this case, Melvin Capital lost 50% of its investments in the first quarter. So a lot of people, especially hedge funds, are more cautious now because they do not want to lose that vital money here. They don't want to lose any more of their investors' money. And so we do see headlines like this, where Goldman Sachs and other Wall Street firms to tighten up on lending for short meme stocks. As we read here, it says prime brokerage firms including Goldman Sachs, Citibank, Bank of America, Jefferies are tightening risk control, imposing higher collateral requirements, and straight out limiting shorting certain stocks. So they know the risk potential of shorting stocks like AMC and GameStop and other stocks like BlackBerry, all the stocks that Wall Street bets and all of them are trying to target to make those huge short squeezes. We see the banks are fighting back and saying that they want to limit the amount of money that they're putting into the shorting because they know they're going to lose it. They lost so much, like Melvin Capital lost 50% of its investments in that first quarter to GameStop. They don't want to lose any more money. So a lot of these banks are protecting themselves by limiting shorting certain stocks like AMC and GameStop. It says until further notice, Jefferies Prime Brokerage will no longer offer custody on naked options in GameStop, AMC, and Microvision, the firm said in a memo to clients seen by Bloomberg News. And if you don't know what naked shorting is, let's take a look at that. So we have this other article saying meme stock mania, what is naked shorting and why is it trending on Twitter? And if we look at naked shorting, it was brought to our attention here during the weekend in CNBC by a news post talking about naked shorting. But naked shorting is turning on Twitter today as it looks like there is no end in sight for the meme stock media as users react to news that kicked this all off. So as we see here, all the excitement around naked shorting started when CNBC host Melissa Lee mentioned that the practice was taking place with shares of AMC Entertainment. The host said the following while discussing the matter: there's a lot of people, a lot of short sellers out there borrowing stocks that they do not have. And now let's take a look at what short selling is, naked short selling is. So we see here Investopedia describes naked shorting as the illegal practice of short selling shares that have not been affirmatively determined to exist. So basically, they're trying to sell stock and shares of that stock that don't even exist, that don't have, that aren't available. Ordinarily, traders must borrow a stock or determine that it can be borrowed before they sell it short. So naked shorting refers to short pressure on a stock that may be larger than the tradable shares in the market. So basically, they're putting selling pressure, trying to drive the price down to make money while the stock takes a nosedive, driving the price down to make money on the way down that it does not exist. And in this case, naked shorting is illegal right here. And if we take a look at this article as well, the key takeaways of naked shorting is that it is now a legal practice of selling short shares that do not exist. Traders must first borrow stock and determine that it can be borrowed before they sell it short. And due to various loopholes in the rules, the discrepancies between paper and electronic trading systems, naked shorting continues to happen because we do see that people are trading online virtually using these exchanges, that we do have these loopholes. And also, although controversial, some believe that naked shorting plays an important and positive market role in price discovery. And if you don't know what price discovery is, it's basically when a stock breaks a previous high and starts just going up to the moon, it starts discovering where the prices could go in order for people to take profits or for it to keep going up higher and higher. So that's what's called price discovery. Once it breaks through an all-time high, it is just looking to see how high it actually can go. So now you understand what naked shorting is. Why is it actually important? Why do we care? Well, if these huge hedge funds that have so much money to throw around that they can actually borrow shares that don't actually exist in order for them to cover the price later and buy it up at a cheaper price, then that means that they are actually going to have to buy shares that don't actually exist, that could even skyrocket the price of AMC even higher than it is right now. And that's why we saw such a huge increase in AMC stock, around 83% just in the last couple of days, that we are seeing that this could potentially set up for even bigger squeeze down the road. And we see here the recent surge of interest in naked shorting has retail traders sending shares of AMC stock higher and higher today. So we're hearing that this illegal practice is happening, and we can see it. We can't actually show proof that it's actually happening because of how it's set up and the discrepancies and loopholes between electronic and paper trading. But we do see the effects of it happening. We can see that a lot of hedge funds are trying to short AMC through this naked shorting practice. And we see that there's a potential for them to even skyrocket the price even higher. So let's take a look at the price right now for AMC and where we can see potential price targets in the near future. But I actually am pretty bullish on AMC, just my personal opinion, not financial advice, but I could see this actually going even higher than it is before, especially with all this press and coverage of people saying that there is naked shorting happening right now. Remember, shorting of shares that do not even exist. And if they have to short these shares in order to buy them back at a cheaper price, that means that they're going to have to buy back an exorbitant amount of shares that don't even exist, making the price go up even higher than it could actually go with the natural price of the shares and the natural amount of shares. Right now, there's 500 million shares of AMC. So if they have to buy back shares that they sold, millions of shares that they sold that don't even exist, that could even increase the price of AMC up even more than we see today. So let's take a look at the price right now. Okay, so currently we see AMC is actually trading at around $55 before market close. And we are seeing this incredibly huge pattern that's been playing out over the last couple of days. Since the 2nd of July, when we had that nice top here at around $72, we did see a huge move to the downside, causing a low of around $37. But right now we are still currently trading around $55. We are creating this huge symmetrical triangle shape. And if you don't know what a symmetrical triangle shape is, it is when we have a resistance that is downward sloping and we have a support that's also upward sloping, creating this symmetrical triangle pattern. And we do see that we are creating higher lows, which is a very bullish sentiment. And we are looking here on the hourly chart, and we do see that we have some big wicks to the downside when we saw that massive dump from $72 all the way down here to $38. But we do see that we are recovering nicely, making a second high right here and then coming back down, but creating a higher low. if we did actually manage to make the price come back down here towards this second low right here, we would actually make a double top pattern, which is a very bearish reversal pattern, meaning that the price would come back down here and start trading in these lower levels. But what we did see actually was we created a higher low, causing this M pattern to actually be defunct for right now, and we are seeing this second wave to the upside here, but we are seeing a lot of resistance come in this area. And let's zoom in to see exactly what's going on here, because I did take my Fibonacci retracement level from the swing high, meaning the very top of this high, towards the very low of this bottom. And what came out actually was that our golden pocket is acting as really strong resistance. Let's zoom in a little bit more and see exactly what I'm talking about. But we do see that once the price came back down here and we started to come back up towards this area, we found a big whip to the upside, meaning that the price came all the way up here to $68, but got pushed all the way back down. We had a lot of selling pressure come in after it reached that second high here at $68, and the price actually came back down here and closed at this level here at around $60. And what we did see after that is we found another retouch of this 21-day moving average, which is this yellow line acting as support. And we are seeing it still act as support these next coming days after that initial second high here at June 3rd. We are seeing that the price is coming back down and retesting it. So this is very interesting for the price of AMC right now. We do see that a potential break to the upside would be from our swing high to our swing low. These would be our price targets. We would have price targets at $82.34, $87, and also here at our 1.618 level at $94.48, around $95. And we get also, if we measure the move of our symmetrical triangle here from our swing high and our swing low here, measuring from the top and bottom, we do see in a potential breakout here anytime soon, we do see that it is actually lining up perfectly with our $87 price target here. And we would also see a psychological resistance at $90 here. So I'm going to post that right here as well. Here, so we'd see a resistance at this line as well, because $90 is psychological resistance. And if you don't know, a lot of the stock market and trading in general has to do with psychological resistance and support. So we see a nice round number like $90 or $80 or even $70. Those will all be huge psychological resistance. So we see a lot of people that would take profit at that price or below that price. And that's what we saw here too below. We did see that the price got all the way up here almost here to $70 here at $68.95, at $69 pretty much. And we did see a lot of people taking profit, selling, and a lot of selling pressure to come back in here. But we are saying that the price target could potentially be $87.32 if we see the price target hit from this huge symmetrical triangle breakout. And what we actually saw here too previously is we saw another symmetrical triangle breakout here as well. And if we zoom in here, let's see, let's take the Fibonacci retracement from this swing high and the swing low. So from the swing high down here to the swing low, and we actually did hit that price target of the 1.418 or 1.414, and we saw that we hit it exactly right here when it was breaking out at that $41.99 resistance, and we saw it almost hit this second price target here at the 1.618 at $44.55, until we saw a huge breakout from that price all the way up here to these higher areas. But we do see that, like this previous breakout of the symmetrical triangle, we could see those potential green price targets that I have here of around $82, $87, and $94 for my 1.618 price target. Now let's also take a look at our RSI, and we do see the price was forming a bearish divergence here, making a higher high and a lower high here, and we're having a higher high and a higher high here. So this did say that we were going to come in for a correction. We did find that correction, but we did actually get reset on our RSI, our relative strength index. And now what we're seeing is I drew this line here, this white line in the middle of the RSI here, right at the 50 mark, meaning once we're trading above this and the RSI is above this white line, we are in an uptrend. And once it's trading below the white line, we are in a downtrend. And right now, we actually came right here to this 50 area and bounced off of it. So if this does hold and we start continually trending up here, that means that we are still going to be continually going in an uptrend, making higher highs. So we have to also look out for our RSI as well, making sure it stays above this 50. If it starts going below it, we do know that we are going to be in for more downside, and we can see a potential breakdown of this symmetrical triangle down to these lower areas right here of around $46. And then also, once we see this orange line play out, this 50-day moving average come up here, we can use that essentially as support here and eventually come back up. Or if we break through this as well, find a rejection point and come and retest this lower area here of our previous low at around $38. But it all depends on whether the symmetrical triangle is going to break up or down. But we are still seeing resistance here at our golden pocket. Zoomed in here, we do see that we did try to close above the golden pocket, got rejected, found another touch to the golden pocket, meaning my 0.618 to 0.65 of the Fibonacci retracement, this blue box that I have highlighted right here, is our golden pocket. And if you are coming from an area here below the golden pocket, you're more likely to get rejected from it until you find the momentum to break back up through it and find it as support. But if you are coming down from it, like we saw right here, you're more likely to bounce off of it and continue the trend upward. But right now we are going up into it, finding rejection here, here, and here as well. So we have tested this multiple times already. So that does tell me that we are more likely to break through it because we have tested it so many times. But we are seeing our yellow line still acting as support, which is very good to see. But if we do break from this yellow line, we are more likely to come and retest this lower level here at $46, and here this lower level where the orange line will come up, our moving day average, our 50-day moving average at $44. So that is what's going to look like for AMC right now and currently. But we are seeing a lot of short sellers that are actually very hesitant to start shorting because of the stuff that I mentioned previously in the video on the naked short selling and what that actually means. But we do see here that we are actually gearing up for a potential very huge breakout of the symmetrical triangle pattern to that $87 price range. So be on the lookout at that. Remember, if you don't want to miss on any important updates on AMC or any stocks that are pumping right now, even crypto as well, I cover a lot of crypto. So if you want to stay up to date, remember to like and subscribe and turn on bell notifications. But that is it for this video. Thank you so much. Peace out.